Welcome back, everyone. We are following that developing news on President Trump's COVID diagnosis. As you can see, this has certainly left Wall Street on edge. Stocks ended the day in negative territory, down almost 135 points. News of the president's illness rattled markets here and really all around the world today. There are still a lot of questions and a lot of worry about what the future will hold for the economy during the pandemic.
The president's diagnosis definitely adding another degree of uncertainty to what has already been a very uncertain 2020. Joining us now is Joel Johnson. He's a certified financial planner with Johnson Brunetti. Joel, thanks so much for being with us.
Great to be here, Aaron.
So we were just talking about it. What kind of initial reaction did the president's health have on these markets overall?
Well, as you would think, just amazing uncertainty, as if this week wasn't enough. And then we have this announcement last night, and the markets opened up way down. Even before the actual stock market opened, trades that can take place overnight were way down. And we actually recovered quite a bit from there. But the market doesn't like uncertainty. We're coming into an election time. The recovery seems to have slowed, although we're in great shape compared to April. And there's just so much, which way is the election going to go? Are we going to continue to recover? Are we going to have to shut down the economy? So the market doesn't like that. And investors do not know where to put their money.
Well, Joel, the economy, the market, everything is so fragile right now. You were just talking about that. And then we get this news today. The jobs report came out this morning, which some said wasn't necessarily great news either. All of this together, combined with the president's health, what does this mean really overall for people with their retirement, what they have to live on?
Mm-hmm.
Sure. Well, if you're getting close to retirement right now, Mark, you need to make sure you have a plan, because if you don't have a plan to fall back on from an emotional standpoint, what's going to happen is all this news is going to take over and fear is going to take over, and you're probably going to do the wrong thing at the wrong time. So it's real important whether somebody's getting close to retirement. And I would say close to retirement means 5 to 7 years. They should really make sure that they are not taking too much risk, because what will happen is, again, the market will go down. I'm not saying the market will go down necessarily, but if the market goes down, if a lot of bad news comes out, excuse me, a lot of times people do the wrong thing at the wrong time, because we're in really uncertain times. This will go on well into next year, this uncertainty. The jobs report was not that great. A lot of hospitality jobs have come back, which is obviously hotels and restaurants. But, if we go into an extended shutdown again, or if we pull back on the opening up of the economy, those jobs will go away again. So there's just a lot of uncertainty, Mark. People don't know what to do. Traders don't know what to do. Investors don't know what to do. And, my heart is with all those that have lost their jobs or are still concerned about losing their jobs. Hopefully this new stimulus package will come through. That'll boost the markets a little bit if they can get a stimulus package done.
Without a doubt. Now, Joel, I know the mantra is always don't panic when there are uncertain times, but in terms of people's investments, their 401ks, what should they be doing right now?
Well, I would say if you're under 55 and you plan to work until age 60 or 65, don't change what you're doing in your 401k. Make sure your investments are structured properly, but keep putting the money in. In fact, maybe you can even step up. I know it's hard. It's counterintuitive, especially during tough times. But, when you are more than 5 to 10 years from retirement, you should be plowing as much in as you can. And quite frankly, be a little heavy on the stock or the stock mutual fund side of things. And that's the thing, Aaron, it's just so hard to do what we're supposed to do when our emotions take over, and we're emotional creatures.
Mm-hmm.
And so bad news comes, we want to do the wrong thing, maybe have somebody that you can talk to before you make big decisions on your 401k.
Yeah, stay calm.
Yes, easier said than done. Some very good advice there. Joel Johnson with Johnson Brunetti, thank you so much.
Thanks, Aaron.